Finance news, and the war in Ukraine has wiped $73 billion from the share market. Along with the global market meltdown, travel companies reported another round of enormous losses today. To finance expert Scott Phillips from Motley. Scott, good evening. The Russian invasion has sent jitters through the Australian market.
Tomo, good evening. It really has. Jitters might even be underplaying it, given the market fell 3% today. A really, really tough day. Almost every sector down, with a possible exception of energy stocks, of course, with the oil price surging to a 7.5-year high. But a tough day across the board. Not many winners, plenty of losers, while the market waits to see what's going to happen in Ukraine and the impact it might have on our companies listed here.
Now, Scott, we all want to know the answer to this question. How long do we, or do you expect this slump to last?
I wish I knew, mate. I really wish I knew. Combination of a couple of things. Firstly, how bad and how long this war goes on in Ukraine, and that's anyone's guess, unfortunately, at the moment. The second is the impact it has on the market, global markets and local markets. The reality is that about 95% of Australia's companies are not going to be impacted at all, at least at a first-order impact, by the war. Now, flow-on effects like, for example, higher oil prices or supply chain constraints will continue to hurt the market. And whenever there's that uncertainty, we do tend to see share price falls. Of course, we also know that history tells us recoveries, when they come, once the coast is somewhat clearer, tend to come pretty quickly, whether it's the GFC or the COVID crash or even back to the Gulf Wars, when we actually saw the market recover really, really quickly once the war itself was underway. So I'm quietly hopeful, but unfortunately, you just can't know what the market's going to think, because it's going to be sentiment that drives movement in the short term.
OK, travel companies took a major hit, with Qantas much talked about recovery stalled.
Yeah, a real challenge for Qantas. Look, the good news, of course, is that their revenue is picking up reasonably quickly, actually, but from a very low base, and it's got a long, long way to go. Delivering a loss of $1.3 billion. The company still has $5.5 billion in debt, and we've talked regularly over the past few weeks about the likelihood of higher interest rates, which makes that debt much more expensive for Qantas to carry. It's going to be a little while yet. The good news, of course, is the borders are reopened, and hopefully things get back to normal pretty quickly.
A little closer to home now, Nine Entertainment bucked the market trend and reported a huge profit.
Yeah, really good result from Nine. I've got to say that the business is doing a fantastic job of getting things back underway post-COVID, or at least post the worst of COVID. Of course, we know the impact on advertising revenues, which have bounced back beautifully. The company actually predicting a 22% increase in full-year profit versus a year ago. Now, that profit was slightly reduced, of course, because of COVID, but a really, really nice bounce back.
And interestingly, a discount jeweller's share price was also sparkling today.
I see what you did there, Tomo. It was a really good day for Lovisa, of course. The company does fashion jewellery, fast fashion jewellery, they might call it. We used to call it costume jewellery back in the day. That's not cool anymore. It's done an amazing job of finding a niche, finding a market here in Australia and increasingly overseas. Their earnings per share up a whopping 70% year on year. And this is a business that largely is a physical retail business. It's one of those ones you find in shopping centres and malls around the world. They tend to be one of those walk past, try it on kind of ideas, but they're doing an amazing job of giving customers exactly what they want. And the results are very clear in the numbers today.
And sparkling news there, but what about Wall Street? What are we likely to see coming out of there tonight?
Yeah, look, the exact opposite, unfortunately. Now, the futures look like, at early trade at least, a decline of about 2.6%. We say this most nights, but I will say very clearly tonight, it's going to matter entirely on their headlines between now and when our market opens, when their market closes, really, in terms of how bad the situation in Ukraine gets, whether we get an escalation or, fingers crossed, a de-escalation of those issues. If we do, things might get better. If things get worse, we might wake up to an even deeper red. The good news, if there is any, is that our market's kind of traded before the US on that Ukraine news, so maybe much or most of that is already built into our share prices. So our fall shouldn't be as bad tomorrow as theirs might be tonight.
Scott Phillips, thank you.
Thanks, Tomo.